much, Brian. I think it will be too early to call the impact of the interest capping because we're only 1.5 months into controlled interest late regime. But one thing is clear that there's been a dash of money from the banking industry to government paper. We have seen oversubscription of all bids that the government has put out there. Why? Because the government is able to give a better reward. Well, we are giving 7 to 8% return on deposits. The government is still able to give 13% on infrastructure bonds, and that shifting may essentially crowd out the private sector from credit availability.
Before President Uhuru Kenyatta assented to the Banking Amendment Bill of 2016, the opinion was highly divided as to the effect of the law to regulate interest rates. And when the president finally signed into law the bill, the market reacted. Equity Group Chief Executive James Mwangi says, though the situation will eventually stabilize, the government must deal with the interest rates offered on treasury bills and bonds, which is around 13%.
The private sector may be worried about government crowding it out because it's able to provide a better return for depositors. So the banking industry may be squeezed a little bit. Whether, yes, interests are low, but is credit available? So that question eventually will arise because of government taking up deposits or potential deposits and denying deposits being converted into credit. But I think at the same time we might have to pay that price so that we can see the infrastructure in the country being developed. But it needs to be a very delicate balance such that the GDP growth rate from the supply side of infrastructure by the government is anchored in productive sector of the economy by the private sector. So it needs to be delicately managed. The public and the investing community decided to adopt a wait and see. So what was denied was the banking industry was denied an opportunity by the market to lend. Everybody said, if interest rates are at 20 and we've been promised 14, why don't I postpone? Now we have crossed the bridge and we have seen significant rise in demand of credit. So I think we'll be back to normal within the coming days.
Mwangi says going forward, commercial banks will be forced to innovate and come up with new products in order to remain afloat. In the country, most banks realize their profit margins from interest income. Equity Bank is banking on agency banking and its mobile platform Equitel to grow its business. The bank has joined CDN, EcoBank and Family Bank in announcing that it will shed over 400 workers through natural attrition as it invests in technology. Last year, another 660 workers were rendered jobless as Equity Bank implemented various cost-cutting measures.
Technology have already replaced brick and mortar, particularly for transaction banking. No customer goes to the bank to transact. Transactions have been digitized, and now cash is being digitized. So the next big thing we'll see is payments being cashless. There will be digital payments. Why? Because transactions have been digitized. We're transferring money now digitally. Banks have used agencies as bridges to convert cash into digital money. And now with the launch of EasyPay in the country, which is by Equity Bank, which is interoperable, we'll see people going to the kiosk without money and buying milk and sweets using either mobile wallets, payment from mobile from their phones, or paying from their bank accounts, either debit or credit cards, in an easy and affordable way. We will most likely start seeing tourists stopping at a kiosk and being able to process. That is the level that we have gone through. The economy will be very, very efficient. I'm proud to be a Kenyan at this time. So technology is essential. I think forcing customers to only consume banking by going to a place would be asking for too much. We have now given the capability of banking to the customers to enjoy banking wherever they are, wherever they want to be. I think people have asked, the way we asked for freedom, people have asked for freedom, choice and control. And people want to control their lives. People want their money to be with them wherever they are. Banking has become a lifestyle. So you can't make lifestyle to be in a certain place. It has to be with people all the time, wherever they are. And that is the essence of digitization. So I agree with the customers. The brick and mortar branch is dead for transaction banking.
Early this month, Equity Bank also rolled out a new mobile payment application dubbed EasyPay to capitalize on the growing cashless system, which is highly dominated by M-Pesa, owned by telecom giant Safaricom. During the first 9 months of this year, Equity Bank made a pre-tax profit of 21.5 billion shillings, with net interest income rising to 32.3 billion shillings from 25.6 billion a year ago. O'Brien Kimani for Business Insight.